Stock of the day. Thought we'd take a look at Redbubble out this morning with the business update. Vastly different to JB Hi-Fi's, which was a cracking earnings update that's been analysed a fair bit here by the analysts here on ausbiz earlier in the session. But Redbubble, not so good. Profit sliding 25% in the first half of this financial year. The retailer saying revenue is hit by heightened competition and stronger cyclical numbers from the previous year when there was an uptick in face mask sales. So by the comparisons, this morning truly matching its namesake by being in the red. That's a pretty horrendous day. Redbubble was at one stage around $5. Scott, what do you think of the Redbubble trading update and the stock at these levels?
Yeah, Kosh, as you say, all red, no bubble, unfortunately, today for Redbubble. Yeah. You can use that one later. It's a really fascinating business, and I think there's some operational challenge there and there's some cyclical reality. They're right to highlight the fact that they're comparing versus a previous period where, frankly, we know that people were more locked down around the world. They were less likely to be out in the shops. Now, the last 4 weeks have been different, but of course, we're not just looking at that period, we're looking at their entire half. So I think it's worth pointing out the fact that it is probable that cycling on some rough numbers, or some great numbers, but rough in terms of the comparison, last year is true. The challenge for these guys is they're trying to build a marketplace that people either go to because they know the brand or because they find it via search. And those are really reasonable things to try and do. eBay made it, Amazon made it, Google made it. I own shares in the latter two for the record. But if you're trying to create and be a marketplace, you've got to be number one. You've got to get people going there, and you've got to get them going there in an inexpensive way. If you own Etsy or another dozen marketplaces who are trying to do something similar, they're all slightly different, but something similar, you're going to say, well, I'm going to bid for those search engine terms. I'm going to make sure I'm number one on the ads rather than number two. I'm going to do better prices for sellers. I'm going to make it more attractive for consumers to come in. This is retail 101. This is the online equivalent of my Westfield versus your Stockland, or your AMP versus something else. This is absolutely at the core of retail. Yeah, it is an online mall. That's kind of the idea. Remember when eBay was described that way, and it was kind of a new concept. Redbubble aren't at the moment managing to get enough people to come through their virtual doors. And they either haven't been able to win those wars on pricing when it comes to search engine optimization and search engine marketing, or they're not able to do it profitably. And this is a really important point for Redbubble, because this is not an unprofitable business. This is not a business that is just turned up. It's a company that is trying to convince itself and its customers, suppliers, and investors that it's going to be the marketplace destination, or at least one of the major ones, of the next 10 or 15 years. And it's not doing a very good job of doing that right now. I like the promise of the company. I like the business model. I like the structure. It is a really capital light business because it has no inventory, there's no tenants. It literally is just providing that marketplace. But that also means it's easy to compete with until you create that brand that becomes the go-to destination. I want to like it with a fall of 25%. Ordinarily, that should kind of grab my attention and say, let's look at that. Maybe now is the time to buy it. But with both marketplace and volume sales falling by double-digit percentages, 14% and 18% respectively, I think the numbers are, it's a really, really tough one to say that this will be a bounce-back story. It's very hard to know. It's from an outsider's perspective, even at the company, they're saying, well, it's kind of competition. You would say, well, why haven't you done something about that? And my answer is likely it's too expensive, or it's too hard, or they're doing their best, they just can't quite crack it. It doesn't give you enough faith as an investor, in my mind, to be buying the shares. So yeah, the fall's tempting, but I think I'd leave it on the shelf.
Yeah. And look at that, $7 a year ago. As you say, down 25% just this morning. It's a big fall from grace. Mark, what do you think of Redbubble?
I agree with all that. I think the other problem Redbubble's got is they're actually matching up art, so for artists with consumers, and they basically print whatever they're buying and so on and supply it. So the model's quite appealing, but there are lots of players in this space, and there's plenty of them in the US doing the same thing. And as Scott said, unless they can become the go-to place for this and get recognised for it and win all the media wars and so on, they can't survive. And they only had, their 21 year was their first year. They made a profit, which actually looked quite encouraging at that point, because their sales went up from 416 million to 675 million, and they made a $31 million profit. That's the first profit they made since they listed. So that was encouraging. And now this latest report, of course, unfortunately, they've lost that momentum and gone into reverse now. So from our point of view at Teaminvest, we want to see a minimum of 4 years, and we prefer 6 years of good history. So they had one good year. They had 1 year of good history, and now that's sort of been kiboshed. So there's no way I could put any probabilistic price on this to be able to say that it would be an investment. So I think it really would be a speculation of saying, do you think they're going to get it right and go forward? I mean, the other thing too is the NFTs, the non-fungible tokens, are a massive growth area in art and so on, where people are selling shares in pictures and digital art and so on. That's a massive growth area. There's no mention of that in their business models or anything. And I sort of wonder whether they're a bit old hat.
Yeah. New chief executive hasn't been in there too long either with the management.